I'm dizzy, drunk, and fighting on tequila white lightning. Gonna be drinking some tequila tonight. We got four friends coming over to the Casa del Divi. And I was just down in the kitchen. Get a load of this. I was just down in the kitchen rolling limes, rolling the limes. Lady cooks a lot, had me rolling limes for the fresh, handmade margaritas that she's going to make tonight. It's a Mexican theme because this little group is going to be traveling on spring break together next month, and we're heading to Cabo San Lucas. Never been to Cabo, been to Mexico probably 25 times and never been to Cabo. So one of the couples that we're going with goes to Cabo all the time. And they're like, once you go to Cabo, you'll never go back. So we'll see. Love the Mexico, love Mexican food. I love me a nice margarita. So we'll be looking at that. And in the meantime, let's look at this. This is Bank of America. We talked about this earlier if you tuned in to that video where I basically did nothing. So I think we're going to do something. We've been watching Bank of America today, and look what they've been doing. Yeehaw! They went up all the way. They were all the way down here, 33.88. They were all the way up to 34.21, and now they're at 34.08. So this put that we have at 34.50, I think I'm going to roll it out and down right now, right here and right now, collect a little bit of a premium, and then I'm going to turn around and I'm going to buy 200 shares of Bank of America because I do like this stock and this company long term. And Jimmy, aka Warren Buffett, he is a big holder of Bank of America, so he knows a lot more than I do. So what we'll do is we'll take a look at rolling this position. There's 3 contracts representing 300 shares. So if we roll it, and I was going to look out just for like our math, the math here, beep, boop, boop, of the abacus. I was going to roll it out to the 24th because that's 28 days because I want to see like what would be the potential return on this type of a, Yahtzee type strategy for rolling this option out along with buying at the current price, collecting the dividend and all the premiums in between. What kind of return would we look at based on how much collateral and do re mi we have on the table? So let's go out here. Let's go out. So our current put is at 34.50. So I was thinking, can we get in on this, man, at 33? I do like the stock. I would take it at 34.50 as far as long-term hold. But what if we were able to get it at 33? I'd do that. Yeah, me too. So let's do that. And let's collect a couple dollar bills for passing go by making this move. And let's see, it's saying medium fill at 16. I'll take 16, $48 credit if we can get that. Let's see here if it gets filled. Currently it is not getting filled, and then it's going to release $450 of our collateral because we are rolling down. So less collateral required between $34.50 a share and $33 a share. And you know how we do, we like to get things filled. So I'm going to be impatient. And normally in life, I'm extremely patient. So let's revisit this roll and let's check on what we can do as far as the bid and ask. So 13 to 19, let's just be very generous to the person on the other end of that contract. And let's go with 14 cents. And that should be filled right away. It looks like it is. So we collected 14 times 3, right? Do the math, Bart. 14 times 3, $42. So I need to make a note of that. $42 for the roll. Now, I want to buy 200 shares. Currently at 34.09. Let's put 200 in here. 200 shares is going to cost me $6,822. Can we just get a little penny on there? Can you go down to 34.10? Just because you know how I feel. You know how I feel. Take a look at me now. I'm just wanting another penny. You're not going to get it, are you, Mark? Up 11. Went up to 12 for a second. So let's just move forward so you don't pass out with boredom. Oh, really? It went up on me again, Terry. It went up on me again. Let's edit. Let's edit this. I want that 3411 now, and I'm just going to sing to you until I get it. Do not do that, Bart. That would be upsetting. Someone would definitely throw their phone or computer or their big screen TV out the window. Now you're just being greedy on that dollar because I need to move on with my life. I do. There it is. Can't we get it? Can we get it, folks? We did. Average share price 34.11. So what we have, we just put 68.21.54 on the table, right? As far as our invested capital, and then we rolled those three puts to 33. So 33 times 300, that's $9,900 plus the 68.21. Hey, do the math on the screen there. Okay, I'll do that in a second, but right now, let's just move on with this. So we have currently on the table, in fact, I'll get out the abacus. There's the abacus. So we've got the 68.21.54 that we see there on the right of the screen of what we just paid for 200 shares of Bank of America. And then we have rolled down from our 34.50 put to a 33. So 33 times 300, according to beep, boop, boop, according to my simple-minded math, is 9,900. So we have $16,721.54 on the table right now as far as collateral and invested capital, because we're only talking about this move in this video. I do have 800 other shares that have a call expiring, I believe, March 17th, and those are at $35. So we're only looking at this particular Yahtzee move here. Yahtzee! My wife always beats me in Yahtzee. Just I don't know why that flashed in my head. You got that Tourette's again, Bart? I do. So let's then go back here. Okay, so we're done with this. Let's go back to, or let's go to trade some options, and let's sell a call. We're going to use the same expiration date as we did on that put we roll. We'll go out to March 24th, 28 days, and I'm looking at 35. So $35 on the strike price, and it's got to be a fairly high delta, because normally if I'm selling a call, I don't want to be too far above 21 on the delta. So we got 36, and that's fine. If it gets called away at $35 bills, then I'm okay with it. We're going to sell a call, and we're going to do two contracts because that's what we just bought, right? And we're going to look at 48 cents. If I get filled at a higher number, fine. Otherwise, I've already bored you enough today with my namby-pambying around. So we got filled there, $96 bills into our pocket on the call premium, right? Then, we now own those 200 shares, and we're going to own them through at least March 24th. So next week, we're going to be locked in on this. We're going to hit that ex-dividend date because we own those shares right here and right now, and we need to be on record as an owner on 3/1 or before. So we have accomplished that. We're going to collect 22 cents a share. So if we do the math there, we got 22 cents, right? And then we bought 200 shares just now. So we'll collect 44 on the divvy. So there's a divvy. Got that. Now, we're basically in what you'd consider to be an alligator arm. Nobody calls it that but you, Bart. They basically call it a covered straddle, right? So we're covered because we own the shares on the call side, and then we're covered with a cash secured put on the put side, but we're straddled between $33 and $35 bills. So one of those things is likely going to happen between now and March 28th. So let's just do math on, let's say that Bank of America blows through the strike price of $35, right? Which if we go to the chart, that would not be unheard of. So if we go to the chart and look at, let's just say a month on that, because you know what we like to do. What have you done for me lately? If you look at Bank of America, it's like a beep. It's almost like a flat line there, which is okay. I'd love for it to trade between those numbers, 33 and 35, and both of those contracts, both of those positions expired worthless, which means expired profitable to you, right, Bart? That's right. So it could easily, though, blow through that at 35. And according to what we have here on the 20-day, that is what it will probably do. So let's say that it does. And on March 28th, I sell those 200 shares because my 35 call strike price was at least at 35 or greater. So I would receive $35 a share times 200 shares, right? 35. You could do the math, right, Bart? I can, but I want to show the math too. So there's 7,000. So we would collect 7,000, all right? And if we think about what we just spent, which was $6,821.54, if we look at the difference between those two numbers, 6,821.54, then we have $178.46 profit we would make between the difference of what we just paid for the asset and what we're going to sell it for on this scenario in 28 days on March 24th. So that's $178.46. Okay. And then we're collecting also a $44 dividend. We just collected $96 for selling the 2 call contracts. And we also collected $42 for the put roll. So we got a Tootsie Roll right there. But we also collected what? I think it was $51 bills on our previous, let's see here, Bank of America. Let's go down here. What did we collect on that original put? Do we have that information? I believe we do. If we keep scrolling and you don't click away from this video, please hang in there. It's going to be worth it. Maybe I'm worth it. Yeah, I'm worth it. Yeah, so let's see. Where is it? 34.50 put. We collected $51. Hey, that's a good memory, Bart. You remembered that. So $51, we have to add that in as well, right? So plus $51. So that would be $411.46. All right. And what we're saying is at the end of it, that put contract at $33 will expire profitable. That's not what they say. And we would then be called away from our 200 shares. So we would end with no shares, but we would have $411.46 in our pocket, right? And then we also did the math on what we have on the table for collateral, $9,900 from the 300 shares at $33, and then what we just paid, $6,821.54 for 200 shares, for a total of $16,721.54 of capital, which we would divide, right? We would divide into our profit, $16,721.54. So that's only 2.4%, Bart, but guess what? That's in 1 month. So if we were able to execute this similar style of Yahtzee trade 12 times in a year, then that math would be, drum roll please, basically 30%, 29.52% annualized return on our Yahtzee trade. So that is what I wanted to show you, what I wanted to share with you, because guess what? We are becoming best friends in stocks, options, and dividends. So if you wouldn't mind subscribing to this channel, leaving me a rating and a review. Well, no, that's on your podcast. I do also have a podcast, The Wealth Snowball, wherever podcasts can be found. Check that out. Subscribe to that show. I'm going to have longer form type of content on the old pod. And you're down today a lot of money, Bart. You are. Look at that. You're just, whoa, where's all the money going? So we're down how much? We're down almost 6,000 a day based on the market, but we're, making our own way, making our way in the world today. It takes every option we got. So we're making some money, showing you an example of Bank of America. I'm also going to put together my balance sheet on what's been going on with me with Bank of America and what I entered the other 800 shares at, what I've been able to collect in premium, puts and calls, and we'll share that or go over that together because I think that'll be interesting. Because at the end of the day, I got to follow money rule, or I got to follow rule number 1 that Sparkle Barbie told me, which was don't lose money. So that's what we're trying to do, because this number, I can't do anything about what the market is doing. I can only control the moves that we're making over here, the companies that we're investing in to collect those sweet divvies. So that's what we're trying to do and what I'm trying to share with you. And as you know, I'm a rookie. I'm a newbie. I don't even know what I'm doing. So don't follow any of my actual trades. You need to do your own research because I'm just a kook living in my mom's basement, trading options on my Obama phone. However, I am going to be learning this. I'm having a lot of fun sharing it with you as we go. We're going to watch this together, and I want to help anyone I can in any way with what I do learn as I learn it. So I appreciate you tuning in. Hope you have a wonderful weekend, and I will then see you in the next video.